Now, part of that modern challenge is what I refer to as the digital and information fatigue, the saturation of all of this noise that we get continuously hit by. That will amplify the state of our brain into this brain wave called beta wave, but chronic beta wave, where we are overly problem solving, but to an extent where we're developing chronic stress patterns. Actively problem solving, but to an extent when we're developing chronic stress patterns. These are different brain states, which I'm quickly introducing you to. I'll go into more depth in future sessions as part of my neuroscience specialization, which helps bring some of that latest research to the mix. Just some quick points I'd like to make. There are many brain states, beta, alpha, theta, delta. They're all useful for different reasons. And for the active mind in the modern world, particularly if you're working professionally, studying at university, or trading, being in a beta state of mind, which is this kind of volatile red brainwave that you see there at the top that I've highlighted, that's fine. But chronic beta is what becomes unsustainable and more problematic in terms of that stress state. What some traders do, traders also that I work with, is to promote an alpha state, so that you have a blend of beta and alpha, but specifically alpha pre and post trade, when you're generating the trade idea and when you want to be in the zone. Alpha is recommended as the state to be in. You can do that through mental strategies, mindfulness, or just through just basic de-stressing protocols. Let's go into the second half of the webinar, where we're going to look at personalities. So we've covered nature. Let's look at nurture. One of the key points about nurture, based on our temperament and personality, is that our personality is ultimately our personal reality. Our personality is ultimately our personal reality. Your temperament, which is another way of saying personality, is a direct projection of the life and trade performance that you will likely have. What do I mean by that? So if you are the type of impatient, trigger happy, all-in person, imagine what that would do to your life. And there are pros and cons. It's not entirely a bad thing, but imagine what that would do to your life, and then more specifically as a trader. So one of the most obvious things is you could be exhibit overconfidence, perhaps overtrade, and take on too much risk. So that's how personality temperament can have a direct influence on trade performance. The connection between personality and your personal or trading reality. Okay, so it's really important to know what type of trader personality temperament you have. The buzzword I use for this is know your trader avatar. Know your trader avatar. And often it's not just one thing, it's a whole mix of different voices that you have in your head, which is part of your temperament, or your, whatever word you want to use, personality, avatar, whatever word suits you. One of the ways that you can do that is through a psychometrics assessment test. Based upon the results of that test, you will know which one of these quadrants you're in, and how you experience energy, information, decision-making, and organization. These are key attributes based on a psychometrics test called the Myers Briggs test. And for any of you looking to be hired in mainstream industry, you might be asked to do a psychometrics test, but I'm now actually inviting you to do it for your trade success. Know thyself, know your avatar as you walk that trading journey so that you can better understand how that will influence your trading. Now, a key point I want to make here is this is not a black label or a jail sentence. This is a home base, not a final destination. So the point here is to start the learning and increase the awareness by understanding more about yourself, not about black labeling, not about jail sentencing yourself. So treat this as a home base that you can build on. Strengthen your strengths and build on your weaknesses. Strengthen your strengths and build on your weaknesses. That is the key to your success as a trader. I work with successful traders and I work with traders who believe that they are subpar. They're not hitting target. And so they're hitting that pain point, and that's why they engage with me. But it's the winners and those that are aiming to be winners that need to do this work and might seek behavioral finance, trade psychology, or performance coaching. So focus on this area. I don't have enough time to go through each of this. You need to be doing your own research post-session, but just be aware you're going to be assigned 4 letters, I, E, N, S, T, F, J, P. That's the lettering. I stands for introversion, E stands for extroversion, N for intuition, S for sensing, T for thinking, F feeling, J for judging, and P for perceiving. And each of these attributes relate back to your trader avatar. Stefan was saying, is that linked with the sympathetic nervous system? I haven't read research suggesting that, but certainly there will be an influence of some sort. I'll car park that question just because it's more specific and a subject that Stefano and I have spoken about in the past, but certainly worth digging deeper and see if you can find any research on that. Now, based on the interview with Dr. Van Tharp, the leading trade psychologist, what does he say are the best trader temperaments based on his research? According to his work, probably 90% of the people in his super trader program, which is the equivalent of a postgraduate study of 3 years in terms of trade psychology, in that work that he has done for 40 years, the best or recommended trader temperaments are NTJ profiles, according to this model. N means they are intuitive, tend to focus more on the big picture, so strategic thinking. T means they are thinkers in their head rather than feelers in their body. J, judges versus P, perceivers. Perceivers tend to get caught up in what they're doing, lost in the moment, so to speak, the wanderers, the mind wanderers. And as a result, they are much more likely to be, in this example, gamblers. But I think more than anything, addicted to some mind wandering or addictive challenge, such as the example given there. Take this with a pinch of salt. These are just some examples that were given, and not a rule. There are plenty of exceptions to this. The other point he made is that junches tend to be more organized as well, and that's the main reason why he attributes this as a recommended attribute. In terms of number crunching, being disciplined, following your trading rules, these are all high discipline process that we need to commit to. And so if you are born with this temperament, then that is a positive for you. If you're not, then that becomes something that you need to build on. You just have to work harder to develop that attribute. Everyone clear on that? So once you do your psychometric test, please do not think, I don't score as an MTJ, therefore I cannot be a successful trader. That would not be the way to think about this. This is just giving you heuristic information about what top temperament traders have based upon the work of Dr. Van Dahl. So if you score this, great. If you don't, that just gives you more growth potential to develop over time. The second part of this is very important. Whatever your trader avatar, whatever your temperament is, be aware that people who succeed tend to be committed, willing to work on themselves, good at math, and on a skill level, understand statistics, simple probabilities, and strategy type games. So if it's strategies, computer games in the day, in this kind of modern day of the PlayStation, the Xbox, and so much other stuff that's out there, or the old school chess or card games, whatever it might be, any strategy-based games will amplify your learning, improve the brain connections, and just make you more of an active and responsive trader. Okay? Now, I'm going to show you an exercise which we will do in the next session. But to understand that exercise, please focus on the next two slides. As a final completion of the nurture side of the equation, we started with nature, now we're looking at nurture. Nurture, remember, is how the environment influences your beliefs and values about trading, risk, and money. But here we are looking at a belief hierarchy. Belief hierarchy. Now, by understanding this belief hierarchy, you can change your software program. By understanding this belief hierarchy, you can change your software program. Here's the good news. If you change your software program, you can change your hardware machinery. If you change your software program, you can change your hardware machinery. How many of you are excited about that? In life or trading, being able to leverage your software, changes in your software, to positively influence your hardware machinery. How many of you are excited about that? I don't mean this in a wishy-washy way. This isn't some cliche spiel that I'm teaching you. This is stuff that has actually been experienced by many people in high performance training and disciplines like trading or like sports and athletics, even in the military, where it's a live or die outcome. This stuff has been tried and tested. How many of you are excited about learning about this behavioral modeling technique developed largely by NLP? Let's look at the belief paradigm and how it fits within this hierarchy. There are external, behavioral, capability, value, identity, and spiritual beliefs and values. There are different examples which I'll go into in the next webinar as a follow-up to this. But if you want to do some homework, get a hold of the book Trading Beyond the Matrix by Dr. Van Dahl. And in there, I will give you a chapter reference where he talks about the belief hierarchy. This is based on the work of Robert Dilts, who's a co-founder of the NLP system. And one of the examples I can give you, just a quick one, is if you look at the identity belief, I am a successful trader, that's one part. A value one, it's important to manage risk. Capability, I can make X% per year. Behavioral, I trade trending markets. External markets tend to trend. And then the very last one at the bottom, spiritual, I can live in a graceful state from being the best I can be. These are a mix of empowering and disempowering beliefs on each of these levels of the belief hierarchy. Now, here's a second assignment. First one is to do the psychometrics test. Second one is to do this exercise. I want you to identify a disempowering trading belief. I want you to identify a disempowering trading belief. Okay? Something that is giving you a mental block. a negative bias, maybe a behavioral bias of some sort, loss aversion, overconfidence, confirmation bias, and go through this list. Question 1 is all about the source of that belief or value. For example, is this a deliberate chosen belief, or did someone give it to me? If it's not yours, then ask who gave it to me. Question 2, what happens when I have that belief? What's the consequence? You have the cause, and what's the effect? 3, who would I be without this belief? This is where you actually remove the shackles off your body and free yourself from that jail that we're often in, the mental jail of that negative block. And what would happen? Reframe it. What would happen if that didn't exist anymore? This is a mental strategy, by the way, reframing. Psychologists do this all the time. 3, who would I be without this belief? And 4, is this belief useful? Sometimes they are, sometimes they're not. I was just coaching a trader yesterday who basically, he had a sophisticated strategy where he managed to combine multi-time frame targets, intraday, medium term, long term. So the system was tried, tested, and proved successful, gave him an edge. The problem is that's 20% of the success equation. 80% is the psychology. Why was he not hitting his target, even though he had an edge? Why was he not hitting his target? He was suffering from outcome bias, the basic being overwhelmed by the bottom line, how much money we're going to make on the trade, in the month, at the end of the year. And as a consequence, he was pulling the trigger too much. And his intraday target became his medium-term target. And in the end, he was either cutting his, he wasn't taking profit when he should, and so he was losing out on a winning trade, or he was cutting too early, the exact opposite, minimizing gains and maximizing losses because of this bias that he was experiencing. And then when we dug deeper into why he had that bias, there are all kinds of other psychological drivers behind that. Okay, so at the end of that, he said to me, look, this is not an unuseful belief or disempowering issue that I have. This is the edge of my trading system. The challenge is I'm misusing it. XYZ psychological influences are overwhelming what is a trading edge. How many of you, relate back to this in an easy way, how many of you think you have a successful strategy, or you've been following someone that does, but for some reason it just hasn't performed the way it should? A lot of the times that's because something up here is stopping your system from working in the way that it's designed to work. And so it's really important to understand what's doing that. And sometimes your trading edge is an edge, but if it's done in the wrong way, it's not as useful as it should be. So ask yourself, is the belief useful? If not, that's the easier outcome. Then you can just start replacing it with a more useful belief. But if it is useful, how can you moderate the extremes? How can you dial down the noise or the negative consequences from what might be a useful belief? You decide what that might be. And at the very end, reframe, what is the more useful belief? And then just identify what you've learned from this exercise and how it can improve your trading performance. That's always important to yourself, but also for me, just to see how each of you are progressing. So what I would like is for all of you to type in the chat which top of mind live example you want to work on. Disempowering belief, mental block, negative or behavioral bias that is impeding your development as a trader, whether you're starting in this process or whether you're a seasoned trader. It doesn't matter. You're always going to be learning. It's always going to be a work in progress. Stefan is saying if a trade loss If a trade is a loss, then the market is against me. That's a good one. Could be a limiting belief. Does anyone want to have any other limiting beliefs? Just as we close here in the next few minutes, anyone have any limiting belief? A limiting belief, all of you need to have one. Bacon's saying Bacon's saying if a trade is a loss, it will eventually rebound, so I should hold onto it as long as I can. Great. Okay, can I hear some more? Leanne, Ayush, excellent success. So Jason Wong saying you will never beat the whales. Oh, very good one there. You will never beat the whales. Whales is a metaphor, as I understand it, as the smart money, the big institutional strategies and liquidity out there. Plenty of examples of that recently. Any other limiting beliefs? Andreas, if a trade is a loss, then my strategy failed. If a trade is a loss, then my strategy has failed. Very interesting one, that. Very interesting one. Excellent success. Leanne, if I could hear from either of you just before we close. Excellent success says, if a trade is a loss, it can have a limiting belief in my risk management. Ooh, can you expand on that? So give an example. How could that impact your risk management in a negative way? And then just finally, Leanne, anything you can think of that is maybe unique to you, doesn't have to be similar to these examples here. And that should complete the exercise. Okay, that's it for our session today. I hope you found it useful. I would now like to ask each of you for key insights. So I'm going to go one by one in the last few minutes, key insights. And if you could get your mics working, it would be wonderful to hear your voices just as we close. For those of you that can still stay on set online with us. So excellent success on the chat or on the mic. Mike, if you can switch it on. Key insights from the session today. Focus. I saw just to follow up there. Its impacts. So the risk management point you made earlier. Impacts makes you more cautious of loss than profit, and as such limit my risk. That's just a quick point you made there in the chat. Thank you for that. Are you able to use the mic just for key insights from the session? Okay. How about Andreas? Andreas, key insights for the session. Sorry, can't use microphone at work. Absolutely fine. Key insight for me is that I can change myself if I want to. Wonderful. Love that insight. That's important for life and for trading. Remember it post-session and challenge yourself to really engage in that growth cycle ahead. Bacon, what about yourself? If you can type in the chat or on mic, key insights from the session.
Hey, I really liked how it connected to psychology versus like us starting from a finance background. Like we started with a psychology background and like the kind of like the theory behind how we decide on things. So I thought that connection between finance and psych was pretty powerful. So thank you for that.
Wonderful, great to hear. And hey, powerful is what we want. We want to maximize the impact for you. I mean, it's always good to get good feedback, but more than that, the real and meaningful feedback is when it creates impact for each of you. So that's great to hear. And I'd love to hear, the practical steps that you then follow with from that key insight. Thank you for that.
Yeah, great. Thanks.
Thank you. Jason, I don't know if I've asked you key insights for the session. Be prepared to make changes to be a successful trader. Wonderful. Remember that trade is that first trade, and that most important trade is not trading the market. That first trade, the most important trade, is trading your existing trader identity for the new and more successful one that will get you to where you want to get to. Thank you very much, Jason. And then Leanne and Stefano to close. Leanne and Stefano to close. Leanne?
Are we unmuting? Oops.
Welcome back, Leanne. I saw that you dropped off and
Sorry
subscribed.
about that. Yes. Sorry about that.
Absolutely fine. Key insights from the session. What do you want to take away?
Just the key insights, just the importance of being aware, and gradually becoming consciously or unconsciously competent. And in order to do that, we definitely have to, develop, ourselves and our psychology and how we approach the markets. So.
Very good. And well remembered, consciously uncompetent, not incompetent, uncompetent. You said the right
Uncompetent.
I sometimes, well, you said it correctly. I sometimes mix it up. But the idea is, we want to go on automatic pilot, essentially. And we all do this already in other parts of our life. Learning how to crawl and walk is an early example when in the days of being a baby and then in growing thereafter. But there are many, many examples that all of us have already demonstrated about this automatic pilot. I can give you some practical exercises that you can do, both in terms of market and mind strategies. So let me know, ping me if you want some specific and practical strategies. We can do that. Thank you very much, Leanne, and well remembered. Remember the stages of development and learning based on that baby crawl and walk example. Stefano, last but not least, what are your key insights for the session?
So my key insight would be very similar to the one of Leanne. I quite like the stages of learning. I find them very interesting. I had a quick question on that though. How would you be able to tell once you've gone from an unconscious incompetent stage onto the next phase and onto the third one and finally the fourth one? How can you tell?
Great question. Work in progress, and it's unique to each person, ultimately based on your objectives, but also based upon your experience of that learning and progression. How do we measure it? I would always say a blend, a holistic blend of market and mind measures, but also qualitative and quantitative measures. So that would be my short form answer to your very good question. So for example, let me give you two examples. So on a market strategy basis, what I was going to suggest, and I can follow up on the Slack, is trading simulations is a great way to look at the market from a market strategy point of view and price pattern recognition, and train your brain into a conscious competence mode. The more times you watch the price action on a regular an active basis, the more you expose your mind to the behavior of the market. Become a chart reader. Become a chart reader, and actively engage with that. Second thing is, on the mind side, I would just say, focus on mental discipline, certain routines, and then as they come more easily to you, then you are closer to being on the autopilot mode. Ways that you can measure that, I mean, that's their recommendations of things to do, but ways that you can measure that, whole number of things. Have a metrics of some sort, and then as you hit target or on a regular basis, and as it comes more easier to you, where you experience a trade in the zone perspective, then you could start to realize that you're progressing from stage to stage. And I would say, ultimately, you will see it in your performance. But remember, it's not always performance, it's performance and progression. So have performance and progression goals in order to measure yourself up to.
That's very useful. Thank you.
Welcome. That's a big question, good question, but big question. Many different ways of doing it. But that would be my short form response. Okay. Have a great week ahead. Happy Tuesday here from Asia, Hong Kong. Evening hours here, morning for you. at least for most of you. I know we have a global audience here. Jason's in Hong Kong, so big shout out to Jason. You're in home territory here where I am. So wherever you are, UK, Europe, US, Asia, happy trading. Look forward to seeing you next week, likely Wednesday in the early morning hours of the Western time zone. Thank you very much. Happy trading. Take care. All the best. See you on Slack. Bye-bye.